Hello, Uncle Jim here. Today I want to share with you one of the greatest ways to make passive income, and that's selling options. I get the same question again and again, probably on a weekly basis. Well, how much can I make? Is it worth my while? Is it worth my time? I believe it is, and I'm going to share with you one of my accounts that I do most of my trading in. I'm going to share on a monthly basis what kind of returns I've been able to earn with that one particular account. So stay tuned. I think you're really going to enjoy what I have for you. Okay, let's go ahead and jump in. I typically like to do a quick market update at the beginning of most of my videos. I'm not going to go into a lot of detail. I still think we're kind of in a very mixed market. Most of this week we've been down. Today I believe we're up, and we're going to continue to see that. We have a lot of issues out there. I believe inflation is actually going back up because of gas pricing going up. That pretty much impacts the supply chain for most goods. So we're kind of going through another increase in inflation, and I think we're going to continue to see that. The car market's having a tough time. The dealers have lots of cars on their lots. They're not able to sell them, and the repossessions are way through the roof. So I think a lot of people in mainstream America are hurting. They're having their cars repossessed. They're dealing with much higher interest rates on their mortgages or their loans. And I also think with student loans kicking back in, and I believe it's October, that's also going to be headwinds on the market. I think for options traders, it's a good thing. We're going to have a lot of volatility. There will be opportunities for selling puts and also opportunities for selling calls. And I don't think that's going to change. I think, if anything, we're going to kind of go through this most of this year, maybe for the foreseeable future. I do think the Fed's going to hold steady. I don't think they're going to increase rates anymore. I think they've gotten to that tipping point, especially with Moody's coming out and downgrading several of the banks, including Truist, one of the banks I like to trade in. So I think they are going to hold steady. They may actually start lowering if we do anything more than a soft landing. I don't think they've ever planned to keep rates this high, but I don't think we'll ever get back to the really low rates we had for so long. I think we're going to have 4, 5, 6% interest rates probably for the foreseeable future, especially for home loans and things like that. And then with next year being an election year, I do think the government's going to do some things to increase the economy, or to cause the economy to probably grow a little bit more than it would have. Mainly because, again, it's an election year and they don't want to have a negative economy if they want to get reelected. So that's my 2 cents. And as always, it's probably only worth 2 cents. So today I had mentioned in the beginning of the video that I'm going to go over one of my accounts in particular, and this is my IRA with options. I'm selling options in all my retirement accounts other than my 401k. But that includes an IRA, which we'll talk about at the end of the video and go into detail on how I've done since the beginning of the year. And then I'm also selling options in my Roth as well as my SEP account. So all my IRA or related accounts, or all my retirement accounts, I'm selling options in. Now, going back about 2 years ago in 2021, I started out selling more options in my brokerages, and I ended up having a big hit tax-wise, which I decided at that point, why don't I move more of my trading into my retirement accounts? This probably was closer to the middle to end of 22, but when I had that big tax bill, I think I ended up making like 50 or 60,000 just selling options, and it hit pretty hard tax-wise. So at that point, that's when I decided, well, I'm going to move a lot more of the trading into these IRA-based accounts. And since I've done that, I've done fairly well. I still trade in my brokerages. I don't do as many puts, vertical put credit spreads, or cash secured puts in my brokerages, but I do a lot of covered calls. My regular brokerages are more invested, mainly because I have a lot of securities I've owned for a long time, so the cost basis is outrageously low. So for those accounts, I'm doing more covered calls and a little bit of vertical put credit spreads or cash secured puts. But in my retirement accounts, that's where I'm doing most of my puts. again, vertical put credit spreads and cash secured puts. Now I'm also doing some iron condors, and again, primarily doing those in my retirement accounts. I have done a few what's called reverse jade lizards, which is like I talked about it in my previous video, but it's a lot like an iron condor, but you just don't buy the call because you already own the shares. You don't need to buy the call. So again, I'm doing most of those in my brokerage versus my retirement accounts, and that's primarily because, again, some of these stocks that I have such a low cost basis, and maybe they don't move much, so it's hard to do well call wise. Now, I do want people to understand you do have funding limitations. So if you want to do the same thing I'm doing and do more of your options trading in your retirement accounts, just be aware it's harder to fund those accounts. It's harder to put money in, so you have limitations. So compared to a brokerage, the brokerage company won't give you as much leeway. So if you end up having several things get assigned, you may get a margin call a lot quicker than you will in your brokerage, and you can move money around your brokerage. I have 2 brokerage accounts, and I'll move money back and forth. Well, you can't do that with an IRA account, so you have to be more careful. You have to keep track of what you're doing, and in my mind, maybe take a little bit less risk. So I just wanted to mention that. So with less risk, what does that mean? To me, I have set up for my puts, I do what's called a 15 delta. So I take a little less risk with my puts and a little bit more risk with my covered calls, but not a whole lot. Now, once we get back into a full-blown bull market, I may take less risk with my calls too, but I'm going to continue with what I call a 15 delta, or like an 85% chance that a put will expire outside the money. I'm going to continue that with the puts because it's worked out quite well for me. I'm not trying to get rich quick. I want to do it slow and steady. I want to make good returns, but I'm not trying to blow it out of the park. I'm not trying to live off just my options trading. For me, it's very passive. I try to do 1 trade a day. I try to earn as close to 200 on that 1 trade. It's usually 2 contracts. Some days I might not do a trade. Other days I may do 2 trades, but typically it's 1 trade a day. I find, something that I like that's worthwhile to trade on, and then I'll make that trade and then move on. I have other things I want to do, so I get on and off. I also take very little risk. I pick companies that are really good companies. I'm not playing with AMC. I'm not playing with companies that may be a lot higher risk. They may also pay higher premium, but you're definitely taking more of a risk. And what I found in the past, because I probably did take more risk when I first started, you can do much higher returns for a short period of time, but the market's going to catch up to you. It's going to burn you at some point if you're really taking crazy risks. And that really starts into gambling. I don't want to do this all the time. I want to get on and off and have the freedom to do what I really want to do. That may be playing tennis, playing golf, getting together with my men's group. I have a Bible study group that we get together. And just doing things that are fun, especially also going hiking. I also like reading. So having more time for those kinds of things. I definitely don't want to be in front of the screen all day. So again, along with your limitations with funding these retirement accounts, you have to be careful because, I'm doing it more so because I can pull funds out at 57 or 59 and a half. I'm currently 57 and a half. So in 2 years, I can start pulling money from most of these accounts. Now, you can't do that typically without some pretty hefty withdrawal penalties. So, just keep that in mind too. You're limited with what you can pull out. That's another reason I'd like to mention that it's important to have a brokerage too, and to have some money in your brokerage, because that does really give you financial independence, since you can't pull out the retirement money. So many people put way too much into retirement and don't have enough in their brokerage. And having money in your brokerage that you can spend now really makes a difference. It allows you to do the things you want to do when you want to do them. It's like FU money. It's you can make the choices you want to make. Whereas if everything's in a 401k or in a retirement account, you're very limited. So if you're younger watching this channel, I encourage you to also be doing a lot of this in your regular brokerage too, and build up those accounts, because again, that gives you the financial independence before you get into your 50s and 60s. So And then, as always, do some retirement planning. I've had other videos where I share spreadsheets, and what's key for me in understanding what I need when I want to retire is having a budget. Also looking at things like the 4% rule, how much can I generate? And by selling options, it's given me the ability to bring in a lot more cash on a monthly basis than I ever thought I could. So actually, my numbers have gotten a lot better. I could completely retire now, but I'd be bored. I like doing this. I'm still a software consultant. We're working on a minimum viable product that we're trying to release. So I'm actually very busy. So I've been working on two different products before making this video. And then I've had some coaching calls and working with my memberships, and also sharing. I did a trade earlier today in Coca-Cola, and I shared that to my memberships. And as always, if you want to take a look at my memberships, it'll be in the description. I have two levels. I try to keep it inexpensive, so it's not a hurdle for people. It's $10 monthly. You get my trades. You get additional posts. I'm going to be adding more bells and whistles. For 25, you get a weekly meeting with me. I say 15 minutes, but it's typically 30. So I encourage you. I will probably limit the $25 membership at some point. I think right now I'm getting fairly busy. I have 2 to 3 meetings a day with people. So at some point, I'm probably going to limit that membership and maybe create a different one that's like, slightly, at least doesn't have that kind of a time commitment that currently I'm okay with. But if I get too many more people, I won't be able to do it because it'll crowd out being able to do other things. So as always, look below, and please like the channel, subscribe. I'm a growing channel. I really want people to understand that they can do this. I'm by no means an expert at it. It's a hobby for me. It's something I like to do, and it's made a difference in my life. So it could also make a difference in yours. So that's all the detail I wanted to go into. I think looking at the actual account, and I'm going to show you the history of the account and talk about the returns on a monthly basis since the beginning of the year. So let's jump into that next part of the video, and we'll go into more detail, and I'll add a little bit more about, one thing you'll notice is on a monthly basis, my return changed drastically. So let's jump into the next part of the video. Hopefully you're staying with me. Okay, now I've created another spreadsheet. This is pretty much I pulled the history out of this particular account. This is my IRA with options. And Schwab does a nice job. If you go to the history page, you can then actually search by different criteria. You can also filter. They also have two tabs. They have the basic history, and then they have unrealized gains and losses that you can also use. So if you're curious, well, where do I stand currently this year? How much am I going to get hit tax-wise, especially if you're using a brokerage? You can actually use that. I've used that to kind of take a look at where I stand at any point in time for the particular year, and it's actually quite accurate. I compared it to my TurboTax upload, or not download, I guess, from Schwab last year, and it was actually quite accurate. So what I've done is I've exported pretty much all the different trades that I did this year. In here too is some interest income and a little bit of dividends, but there's not much. It's a small fraction, so it won't really change the data that's in this spreadsheet. So this is a dump just for this year, so it only goes through, let's see, 8/8. So 2 days ago, I did this yesterday, and I primarily wanted to show what it looked like for the beginning of the year. So we'll talk about the numbers at the bottom at the very end. So this starts back in January. So back in January, I started selling a lot more puts in this account. Again, this is my IRA with options. I did have to go through a little bit of a hurdle to get approved for selling spreads in an IRA, and it wasn't difficult. I just had to communicate with Schwab, I think fill out an application, and within a couple of days, I actually got access to it, especially with the fact that I've been trading a long time. So going back in January, these are some of the same trades I've done in other videos. We got Williams Sonoma, IWM, Devon, Apple, Now, I haven't done Apple in a while, and if Apple gets down into the 160s, 150s, I probably will be selling puts on them too. And I'm not going to go through the specific trades, but most of these have expired or been closed. So I also did SCHD, and then IWM, BP, ASO, BBY, Procter and Gamble. And then so for the whole month of January, I brought in $1,400, and this account, if you notice at the very beginning, it started at 86,598. So using that value, it was about a 1.67 monthly return that I was able to do literally in January. Then in February, again, a lot of the same names. I don't over diversify. I may roll the same names, but typically I'm not bringing in a whole lot of companies. It's usually probably 13, 14 specific stocks and ETFs that I use. Here you'll see XLE, Polaris, PII. Sorry, I'm dealing with a summer cold, so I've been sick all week. Again, Williams Sonoma, Camping World, which is probably one of my only cash secured puts because it's fairly inexpensive, and I've done quite well with it too. IBM, I did do some with IBM. Procter and Gamble, that's one of the only dividends that I do get in here. So also did Zoom. I think I did a video on Zoom not long ago, and Qualcomm. Both those were mentioned in the video, and I went into detail about those. So in February, I did nearly $2,000, and I'm basing the return still on the original 86,000. I probably could have taken more time, but like I said earlier in the video, I'm very, very busy right now. So I wanted primarily to still get this video out and share with people the different returns. So for this on a monthly basis, again, using the starting balance, it was a 2.29%. So, and I've said before that I used to say 1 to 3%, but it's really up to 3% is what I've been able to do. And this was one of my better months. I did 2.29%. And then we got into March. Again, Schwab, IJR is another. I did a call for IJR, which is a covered call. So it's one of the ETFs, XLE. And for March, I didn't do as much. I only did 777, which was a 0.89 monthly return. So one of my lower months. So you can see there's a big, huge difference. So 0.89 and I think 2.24, something like that. So again, the 0 to 3%. And I believe back in 21, I did have a month that was pretty close to 5%. But rarely have I gone beyond the 5% in one particular month. I've heard other people that say they have done it and can do it, and you probably can, but it's a lot of risk. It's, if you're doing something like AMC, or I know a lot of people like Palantir, you could potentially do it, but you are definitely taking a lot more risk. And from my own experience, maybe you'll do really well one month, but the next month, it might catch up with you and you might have a really rough month. So again, a smaller return at that point. We're in March, then April. BBY, I've done a lot with BBY. Again, IWM, DVN, CVS. Started doing CVS later in the year. And I really like trading with CVS. It's actually been at a really good price. VLO, that was, I believe, the first time I had traded with Valero Energy. So that month I did 1521 and 1.76%. And then for the next month, again, some of the same names: Qualcomm, IWM, which is Russell 2000, Schwab. Now this is about the time that I did run into some trouble with Schwab. Now that's when the banking industry dropped, and I did get assigned. So I got assigned 200 shares. This is just showing what 100 shares is worth currently. And then here's I did sell 100 shares mainly because I had mentioned earlier that you have to be careful in your retirement accounts because it's hard to get enough funding. Well, with 14,000 in Schwab being assigned to you or to me, it really messed up my cash, and I still had plenty of cash, but I needed to buffer that a bit. So I went ahead and sold 100. Then I sold the two puts, and I brought in another 2,000. And where I currently stand is I think I'm like a negative 500 or so for my Schwab trade. But if it gets up into the 70s, which right now it's in the mid 60s, I'll do quite well with it. Not quite well, but I definitely will break even and be showing a profit. And here I did have another dividend, about $94. And here I also had some bank interest. Now, Schwab, I'm not set up to earn the higher interest rate. I need to talk to Schwab to find out how I can start earning the higher interest rates closer to 5%. I know Fidelity, it's either Vanguard or Fidelity is paying you close to 5%. I believe Schwab is only paying like, 0.35% or something like that. So I definitely need to have a phone call with Schwab and find out how I can switch that. I should be earning a lot more interest than what I am earning. And then Devon, I did more trades in Devon and Zoom. And again, Russell 2000, IBM. Here I did 2606 for the month of May, which equated to a little bit over 3%. And that, so far for this year, that's my highest return for the entire year. Which considering, I believe at that time it may have been a $90,000 account. To earn that kind of money on a $90,000 to $100,000 account is quite good. Another interesting fact about this account is the only thing that's been assigned to me is Schwab. So everything else, I literally only have, I think I have one or two ETFs that existed before I ever did options trading in this account. One is, well, we can see with the dividends, I think it was IJR. Let me see. IJR. I do own that, and I do get some dividends with it. So the fact that, very little, if the only thing that's been assigned to me is Schwab. So let's keep going. So next, it was June. Same names again. I did some covered calls on IJR. More dividends. Sorry. And then in June, I did 2,068, which is just shy of a 2.4% return. So again, one of my better months, and it was June, I believe, was a pretty up month for the markets. Again, similar stocks: Qualcomm, Williams-Sonoma, Devon, Zoom. And then in July, all I did was 639, so that's my lowest return for any particular month, and it was 0.74 monthly return for that. For July, I did fewer trades in July because of vacation and other stuff, but I did more and potentially. I've still been reaching my goal of close to 4,000 a month, so I did more trades in other accounts. And I believe in July I did a lot of covered calls, so my guess is that month was one of my highest covered calls that I've ever had. And then August is, since we're still early in August, I've already done 946 in August, which is over a 1% return. So not bad. This month probably will be a 2.5%. Something along those lines. So if we come back down, so grand total 11,990. Now probably about 800 or 900. Well, not even that much. Maybe 400 or 500 is dividends and interest. So the average monthly return. So again, that means it would be a little bit lower than this, but using these basic numbers, it's 1.73 on an average for this account, so it currently the balance is just shy of 100,000, 99,375. And then if you just use where the account started at the beginning of the year and where it is at the end of the year, it's like a 22% return. So it matches up pretty close to that 1.73%. The highest month was 3.01 and the lowest month was 0.74. So again, you know, I firmly believe you can do up to 5% without, well, definitely up to 3% with not taking on a whole lot of risk. To get above 3% on a monthly basis, you are definitely taking a lot more risk. And you're probably not doing the way I do things, where I like to do one trade a week, or not one trade a week, one trade a day, 4 or 5 trades a week, earn around $1,000 a week or $4,000 a month. And I'm pretty close. I'm probably like 3,900 on a monthly basis currently. I think I had my highest month maybe 4,300, and I think I did have a 3,600 month, which may have been July. You know, so you can see you can do quite well. And you know, I don't have a whole lot of investments in this, so most of the returns literally came from you know, selling the puts and a little bit of calls, mostly puts. You know, so on a yearly basis, you know, a 22% return is quite good. And again, this is only based on 8 months. I believe by the end of the year, overall, it'll probably be closer to 25 or 30%. And then when I looked on Schwab, they have a way for you to actually look at what the return for this account over the last 2 years, it's been averaging something like over 18%. So, and again, I've only started selling options in this account over the last maybe year, if even that long. So I haven't been selling in this account as much. Like I mentioned earlier in the video, I did a lot more in my brokerages. You know, so I definitely could do better. This being a hobby, being a part-time, I just kind of wanted to give you guys a feel for how well you could do. And again, these are numbers directly out of my account, my IRA with options account. So thank you. I'm glad you joined me. And as always, leave a comment if I missed something or you had a question. I do try to answer all my comments. And thanks for joining me. Have a great day.